Going over IRS Form 8275-R, the regulation disclosure statement. So most taxpayers that end up taking a tax position on their income tax return that is not otherwise straightforward or obvious would file IRS Form 8275, which is the disclosure statement, to establish their position, demonstrate good cause, so on and so forth, specifically to avoid accuracy related penalties, any negligent tax penalties, etc. However, if your position is contrary to existing Treasury regulations, you still need to disclose your position. However, you would use IRS Form 8275-R. The -R is the document that specifies your tax position as being contrary to Treasury regulations or IRS rules. And if that's the case, individual taxpayers probably should not be completing this form. This should probably be a discussion between the taxpayer, their accounting team, and possibly tax attorneys. This can be very complicated and difficult. So the purpose of this video is simply to walk through the form itself, the mechanics. We're going to use some information in our example. A lot of this was just pulled out of the form instruction for clarity purposes. This is not in any way intended to be tax advice or legal advice. So your tax professional should be very aware of this document. But as a taxpayer, if you're having to resort to this, definitely do let the professionals do the work here. So there are 4 parts to this tax form, but basically most of them are information fields where you're going to do the bulk of your lifting by providing evidence or explanation, references, so on and so forth. So at the top of the form is the taxpayer information. Part 1 is general information. You can have up to 6 different entries here. Basically, you're talking about which regulation section you're establishing your position, what your position is, and then the impact to your tax return. In part 2, you're going to provide a detailed explanation. If you're a partner and you're reporting pass-through entity income on your own tax return, you will complete part 3. And then in part 4, you're using this to carry information from either part 1 or part 2 as you need to. So let's just go to the top of the form. We've, in this example, we'll put ourselves in the shoe of our hero, John Doe. He owns an S corporation called Doe Enterprises, and they're filing this regulation disclosure statement with their income tax return. So at the very top, you'll put the taxpayer name and identifying number. So it's important to make sure that you understand the name should reflect the actual tax return. So this would be filed with the Form 1120S. If this was a position that John Doe was personally taking on as Form 1040, then you would see John Doe, his social security number, and then you would actually have to provide additional information about Doe Enterprises in part 3. So in this case, the position that's being taken is on behalf of Doe Enterprises, not John Doe himself. If there's an information return for a foreign entity, such as IRS Form 5471, you would enter the name of the foreign entity, their employer identification number if applicable, and then what's known as a reference ID number, which should be a specific unique number that's attached to that information return. That way the IRS will be able to determine, cross-reference the reference ID number the from the filed form with your 8275R, and then evaluate and make a determination. So in part one, we put an example, but for every single entry that goes in here, you're going to establish the regulations section that you're taking a position on. So the instructions specifically state you cannot do something like this, like where it's, vague, you don't know which part. You need to be very clear. So Treasury Regulation 1.482-7, that is, see if I can pull this up real quick down here. We're talking about this position all the way down here. So right here. So 1 and then 3. So right in here. But if you just make it open-ended and vague, you're not pinpointing the exact authority, and the IRS will disallow it. So, the specific instructions are very clear on what you have to do to document the regulations section properly, so that you're not sending the IRS agent on a wild goose chase. They're not going to do that. They're simply going to disallow your position and basically slap you with the tax liability that you were trying to avoid in the first place. So in column B of this, you would enter the item or group of items. So an example in the form instructions were entertainment expenses, and then in column C, you would enter a detailed description of items that you consider to be entertainment expenses, such as theater tickets, catering expenses, banquet hall rentals. So, then you would have to come up with your documentation like receipts and why you believe that this is the appropriate position, despite what the section may say. And this specific example has nothing to do with these items. These are two different examples from two different parts of the form, but just to illustrate that you're going to document your Treasury regulations section here, the one that you're establishing a contrary position on. You're going to enter the item or the group of items that you're declaring your whatever it is, probably a tax shelter of some sort, although that's definitely not what you're striving for. You're striving for a tax position such as maybe an expense that was otherwise not allowed. You're trying to document why it should be allowed, and you're making this based on reasonable cause and good faith. And those are important terms because you can actually get hit by penalties for things like not having a reasonable basis. So the accuracy related penalty, 20% of any part of a tax underpayment that is either due to negligence or disregard, substantial understatement of income tax, overstatement of liabilities, uh, any understatement of other tax liabilities, uh, any position where you don't have economic substance, you don't have a reasonable basis, reasonable cause. These are all things that you have to prove. And if you don't, then tax penalties apply. And it's not just for individual taxpayers, it's also for tax return preparers. So a tax return preparer has to be able to also demonstrate to the Internal Revenue Service why they take a position, why they're recommending that a client takes a position that's contrary to Treasury regulations. If they make a recommendation and decide, and the IRS decides that they shouldn't have, then the tax return preparer can also be subject to a penalty. So it's very important that you're documenting this down to the form or schedule. So in this case, IRS Form 1120S, that's the S Corporation tax return. Line 19 has to do with other expenses, and then we just put down the amount, $1,000. So then we would enter the detailed explanation with whatever our justification, our references. This could be case law. This could be, something that you can document that shows good cause. Part 3, if we were entering information again that was about tax information reported from a pass-through entity, then now you're required to put that pass-through entity's information in here. So let's imagine for a second that we're John Doe and he's reporting on Doe Enterprises. So we would write Doe Enterprises. So then the tax year, the pass-through entity, let's just say they operate on a normal calendar year as their tax year. And then if you don't know their IRS center where they pass or file their tax return, most entities you can reach back. You can ask them where they filed. If you got a K1, a Schedule K1 from either a partnership or an S corporation, you should see that location on your K1 statement. If it was e-filed, you can simply write e-filed in here. That's acceptable. And the IRS will accept that. So you're trying to give information to the IRS about the pass-through entity. And then in part 4, you're simply carrying on the narrative. All of part 4 is just a blank piece of paper. You can use as many as you want. But once you start referring to different entities, if we had, let's just say we had one position based on something that we received from Doe Enterprises, and then we received another item of income from a different company, Jane Doe Enterprises, then we would have to file a completely different Form 8275-R. So again, the IRS does kind of stipulate a couple of points. You only use Form 8275-R when you're discussing positions or statements that are contrary to existing regulations. And then if you're simply declaring a position but it's not contrary to existing guidance, you would use IRS Form 8275. So we do, that's all we have for this tax form walkthrough. We do cover this in a little bit more detail in our article, which you can find on our website. But again, if you have a tax professional, then that person probably has the information they need to be completing this form themselves. So this is not a do-it-yourself tax form unless you happen to be a tax attorney. So do yourself a favor if you're having to go into this position. Make sure that you've got adequate, at least tax advice, if not legal advice. So we'll link to a couple of articles that were mentioned either in the article or in this video in the show notes. And if you like our articles, please subscribe to our newsletter. If you like our videos, please subscribe to our channel. And as always, if you have any questions or comments, or if there's something that you'd like us to shoot a video on in the future, please hit us up in the show notes or the comments section. Thank you very much and have a great day.